Well, thank you very much for staying with us. And of course, we're bringing you our coverage of the budgetary review, if we can call it that, because we've heard now that it may not even be a mid-year budget review, as is to be presented by Ken Ofori-Atta, Minister of Finance and Economic Planning. We'll be heading over to Parliament at a point to hear from our correspondents and what exactly the happenings are in Parliament. Initially, at around 10 o'clock, we were supposed to get or hear from the finance minister. But now we've been told that at around 1 o'clock, he is going to be delivering that statement. Interestingly, it's just a short while ago that I was reading from Kwame Agboja, Member of Parliament on the NDC side, who was suggesting that, guess what? It's not even going to be a mid-year budget review. This could be some speech on the floor of Parliament. We've also been hinted that it could be a request for some supplementary, basically a supplementary budget, or some request for further funding in the course of the 2022 fiscal year. So what exactly can we hope to see, and what other dynamics would play out in Parliament? Well, we'll be having a discussion with our guests in the studio to get a grasp of what they foresee, what their expectations are ahead of this entire saga. And so joining us for the conversation today, we have Julius Bradford Lamte, Head of Research and Advocacy, Ghana National Chamber of Commerce and Industry. Hello.
Thank you very much.
Thank you for joining the conversation. We also have Gilbert Uentriado, Tax Manager at Deloitte, Ghana. Gentlemen, thank you for joining the conversation.
Thank you very much. Thank you.
Good. Let's, before we hear from Finance Minister Ken Ofori-Atta, let's take a look at some of the things that have been happening in recent times. I was interacting this morning with Professor Bokpin of the University of Ghana, and he made mention of the fact that, look, there are so many different factors at play. One of them being that we may say our debt to GDP is 78.3%, but what's the reality? We have arrears to WAEC, to contractors of 25 billion Ghana cedis plus. That's the equivalent of over 3.2 billion American dollars. How much are we getting from the IMF? Expecting. That's about half of that. That's one thing to take stock of. So the arrears owed, and then the bit about savings made and applied, which he wants to see represented or presented by the finance minister. And then you can put all of that side by side with the latest downgrade by Fitch when it comes to our GDP expectations from 4.8%. Mind you, the IMF had given us a projection of 5.2%, the World Bank 5.0%. Fitch, that had given us 4.8%, has now reviewed that to 2.6%, minus 2.2 percentage points. That cannot be good. So I'll start with your reflections on these before we get into the bit about taxation, what our expectations would be, and whether if we now have a supplementary budget where maybe requests may be made for more money, what that would mean to our economy. I'll start with you, Gilbert. What's your overview considering all of these factors and what your expectations would be?
Great. So as the professor has already alluded to, IMF is going to, provide, let's say, half of the expenditure that is owed to these subcontractors and all these people. And, the key thing is that this has a rippling effect on the economy. Because if I'm owed, how do I pay people who have worked or who have delivered services to the government? And once I'm not able to pay them, it then affects their expenditure pattern. Once expenditure patterns are affected, it also in a way affects revenue. Well, it's when I spend that government can raise indirect taxes, i.e. VAT. So if I'm not able to spend that much, so then that means the expectation in terms of revenue mobilization from indirect taxes will be affected. Now, he also alluded to the fact that government should then show how some savings have been made. Now, where are you to make the savings from? It's expenditure cut.
Right. Expenditure cuts like in which areas? This morning when I was interacting with Professor, I believe it was Bokpin, who made mention of the fact that if we are even able to bring our number of ministers from 100 plus to under 60, we'll be able to save, per his projections, about 3 billion Ghana cedis.
Great. So he's only looking at it within the context of reducing the quantum of what ministers. But then we need to...
And to be fair, this he said among other things, not just...
Yes,
but,
exactly. So we need to then go down to the basics. I mean, look at the various ministries. How are spending being done there? I mean, in terms of the budget allocation that has been given to them, how are they appropriating these expenditures? It has to be evaluated. Sometimes there should be some cuts along that area because there could be instances whereby things that they have already requested for are already in-house. But if you don't have an effective monitoring and evaluation system, that is not to say that is not being done, but it has to be enhanced and made effective. And it's only through that you can make some of these cost savings. Now, if Fitch is to downgrade you to 2.6, meaning that...
From 4.8.
From 4 meaning that investor confidence will go down.
The same investor confidence that we're hoping, I mean, once we announced we were going to the IMF, you have some goodwill in there.
Yes.
With this, you already start seeing an erosion of that confidence.
Great. But then, I think that government should also look at other options of trying to whip up investor confidence. I did indicate in our earlier discussion that, you see, the cost of doing business in Ghana is a bit challenging. But of course, from where I sit, I could say so. They are in the boat, and they could then tell how the heat is. But it needs to be looked at because if interest rate is high, the cost of doing business will be high, and it then stifles expansion. It doesn't give me the space to expand. Currently, the cedi is not doing that well, meaning that exchange losses is skyrocketing. You have industries that have imported raw materials that they are going to then transform. But if the exchange rate is not then quite interesting, and that means my cost of doing business, I'll be making a lot of exchange losses.
Right.
And this will have an impact because if I plan to, let's say, pay a supplier who has given me a raw material, let's say $50,000 at, let's say, 5.6, and now it's hovering around, let's say, 5.8, that variance is very material.
Right. It can change a lot in terms of my dynamics, my planning, group revenue generation, and everything
So
else.
once that dynamics changes, then I, as a business person, I then have to look at other expenditure lines. So then it doesn't free that space for me to even recruit more, for me to enhance my production.
Right before I bring in Julius, another curious aspect, especially when it comes to interest rates. Now looking at government's borrowing at around 30% and all of that. It also creates an interesting picture even for people who are investing in government. I'm talking about T-bills and the rest. You invest in government and you have some sort of great surety because that's one of the safest investments to make. But is it so safe now? Because you look at T-bills, you look at the rate and you look at how much government is borrowing at, and you could find yourself in a very tricky place.
Exactly, but some may also see this as a prudent way of doing business. Because don't forget, that government is now borrowing. One who wants to take the risk to make funds available. But then the question is, that should not be the only point of measure. You understand me? There should be other variables that could also be looked at. But someone would want to take that risk. But then it's based on a risk-averse investor. A risk-averse investor may not want to go on that tangent and may be looking at other variables to assess the performance of government. But someone who would want to take that risk could then throw in a towel and say, hey, government needs more funds now. Let me take advantage of it and then see how best I can rake in terms of the return I intend to get. But then how is government also servicing some of this in terms of what? The returns that one is envisaging to earn by making investment into some of these investment vehicles. So that has to also be looked at.
Let me come to you briefly before I go to those who are joining us via Zoom. Julius, what would be your expectation generally looking at where we find ourselves and these latest dynamics and what you foresee Ken Ofori-Atta could be telling us today?
So for us as a chamber, so we are seeing that the finance minister will try to present a picture that government is trying to build the confidence of the private sector by making the point that government has cut down expenditures, but we want to see to what extent has this expenditure cut made on savings.
So you want the facts and figures. We've slashed, for example, 30% when it comes to executive salaries. What are we getting from that? We say fuel, components, we've slashed them by 50%. How much has accrued from those?
Exactly.
Exactly. And then also we also want to see how the COVID-19 levy fund that was proposed, how has it impacted business? Because mind you, any new policy, that direction is meant to ensure that the growth and then also sustainability of industries are put in place. And so we want to see the clear policy announcement that is there that would ensure stability, that would also assure this predictability, and that would also boost or bolster confidence. So these are the areas that we're expecting. Now, on the issue of the Fitch downgrading us, it rather comes on a sad note, but that also draws the attention that the government must find new ways of trying to raise funds. Now, why would someone want to give government free money? Because they don't have clear understanding of the various industries. If we have clear visibility of the industries that we are operating in, it will make sense for banks to loan to these industries. Right. And fortunately, we have the Development Bank Ghana that has targeted 4 main sectors. So that's the agribusiness, the manufacturing, also value-added services, and also hospitality. So these are the sectors that if we are able to channel our resources in there, we'll be able to raise the needed funds and also boost our confidence.
It's interesting you mentioned that, because when you talk about agribusiness, one of the sectors, we've heard the Agri Minister, Dr. Akoto, talk about the fact that, look, we want you to pump more money to the farmers. Yeah. But that's not exactly happened. It appears there's been a bit of a stalling in terms of wanting to give out to farmers, also because of certain dynamics at play. But let's go over the Zoom portals virtually and connect with our guest there. Kweku Asante is our parliamentary correspondent. He joins the conversation. Dr. Edu Owusu Sakwadi is a senior lecturer, Economics Department, University of Ghana. We also have Williams Pepra, who is with the association. Then Professor Andrews with a university in the United States. We have my own colleague, George Wiafe, who is with Joy Business, and Yao Latte, a partner at Deloitte, Ghana. Let me start with George. If you can hear me. So we know that quite a number of things have happened. Picketing going on by nurses who have been trained since 2019, who have graduated since 2019. But just give us a bit of scope in terms of what the expectations are and what has been panning out in Parliament.
If you can hear me, I think that right now there are several papers being laid in the House right now for consideration. And an interesting development, that previously in the statement that was announced in business for this week, there was a statement made to that effect that there will be submission of a supplementary estimates.
Right.
More we are picking based on what is happening in the House, there will just be a laying of paper. So it looks like there wouldn't be, again, it's firmed up an earlier report that we put out, that there wouldn't be any supplementary budget that will be placed before the House for seeking Parliament's approval to spend extra revenue that has come in. So there will be laying of paper. Again, what we are picking up from is the government is hoping that some of the cuts that it made during the previous months, they might be able to reallocate some resources to some of these areas, take care of some of the new expenditures that is coming up with respect to the cost of living allowance that the minister outlined earlier this year with respect to dealing with those organized labor and public sector workers. And also don't forget that when you look at our interest payments, the cost is also going up as well. And it was the expectation previously that this supplementary budget would have gone to channel or move these funds to this area. But it looks like government is hoping to fall on some of these cuts that they have made to deal with some of these expenditures. So what we can say now that if what is happening in the House is anything to go by, then there wouldn't be a supplementary budget being presented today by the finance minister.
What would be the implication of that? So I'm looking at a post here on social media by Kwame Agboja, and he says, for example, using the picture of the 2022 mid-year budget review. He says there will not be a budget review. The MPP says the finance minister will only make a statement on the floor, like you're hinting at, whatever that means. How will they pay for the extra cost of the COLA approved recently between organized labor and government? So what exactly will be the difference between the mid-year budget review that we're expecting and this supposed statement? Could it also include any talk of further spending outside of the 2022 budget?
Well, let's get back to what the Public Financial Management Act says and why this is happening today. So the law says that not later than July 1st, when the minister should come before the House and update us on our first position. If there's some extra expenditure to be made that was not approved in the original appropriation, then come back to that. But the law says that even if you attended a PESWA, Parliament has to approve of it. So it means that they are still going to work with the old appropriation, but it just could be realignment of expenditure or realignment of funds, which has been approved by Parliament. So, for instance, if, government was hoping that the cut in the 30% has brought maybe about 10 billion, or maybe let's say 20, these are just rough estimates. Can those estimates now be advanced to deal with the COLA issue? Can those estimates be advanced to deal with the interest payment issue? And these are the issues that are coming up. So, again, if we go by what is being said in Parliament, it means that we won't have a supplementary budget, but just a statement that will be laid before the House and reviewing the estimates in terms of the macro targets and all those things. And that is what's going to happen. And it looks like if what we are picking up is anything to go by, government then would rely on those savings that it has made, that has already been appropriated in the 2022 budget, and maybe advanced these areas. But again, charging from people presentations, sometimes even 30 minutes before presentation, things change. So there's as the economists who say you want to hold all these variables constant, that as of now, there wouldn't be a supplementary budget.
All right, do hold for me, George. So some interesting dynamics that you put out there. But let me bring in Dr. Edu Owusu-Sako, the Electoral Economics Department, University of Ghana. Thank you for holding for us, sir. Now, you've heard these dynamics. We've moved from a full-scale budgetary review to this point where we could just have a statement on the floor of Parliament, maybe detailing, like what my colleague has been saying, how government has been able to accrue some savings and what the way forward would be. But what would your expectations be, especially considering the matter of COLA, which was approved, starting from the 1st of July? The bit about the E-levy, which we know has not exactly delivered on expectation, among other factors like the arrears I was speaking of?
Well, the government is facing serious fiscal challenges. The figures from the first quarter indicate that the government was able to raise 16 billion, 13.9 billion out from the tax revenue and has spent 12.9 billion just on debt service. So virtually the government has to borrow to even pay workers. So they have serious fiscal challenges that they must deal with. Of course, there have been COLA negotiations. Workers are asking for salary increment here and there. And therefore, the government have to up its game on revenue mobilization. And what quickly comes to mind have been a number of revenue measures that some of us have been talking about for years. I think the property rate is there, tax exemptions is there for the government to review and talk about it. But what comes to mind first has always been the issue of E-levy. As it stands now, we don't know whether the E-levy is performing or not because we don't have the figures from the finance minister. What many pundits are hinging on to for their discussion has been the tweet by Gabi Ochedako, Mr. Gabi Ochedako. And so we don't know whether the E-levy
and even before that, though it wasn't wholly representative, what Imani Africa also put out there, if you recall, about, what was it, the CDD or Imani Africa? One of them putting out details out there that the E-levy was woefully underperforming. That was before Gabi Ochedako also came out. So from those two ends, at least though we don't have any details from the central bank, it doesn't look good.
Sure, I will not say I support those statements or not. I will wait for the finance minister to give us details about the levy, whether it has performed or not. And that is why it is always necessary to have the mid-year review, because you have a program for the year and halfway through the line, you want to review the program and see whether they are performing or not. So the finance minister will tell us whether the e-levy is performing or not. And that he should go on a step further to tell Ghanaians about the measures they have put in place to make sure that the e-levy will perform. Either they want to scrap it, they want to review it, or they want to leave it as it is. If it's not performing, then the obvious solution is to review it and see. But one thing must be clear. When we are talking about taxation, I'm sure there are a number of tax experts there, but from my point of view, in public finance, the tax rate should be the optimal rate. And the optimal rate here means to give the government maximum revenue and at the same time minimize the burden on the payers. And some of the tenets of public finance in terms of taxation is that you do not discuss taxes, you impose the tax. Once you begin to hold town hall meetings to discuss the taxes, it means you already lost the battle on the ground. And that is why there's so much noise, there's so much partisanship about the e-levy. It wasn't well thought through, it wasn't well designed. The objectives of the levy and the design do not sit well with each other. So a lot must go into this e-levy, I think. I am of the view that...
So in other words, all of this, when it comes to the e-levy, was very disjointed and the entire thing was dead on arrival. That's what you're saying.
It looks like that, because I have written an article on this and my position hasn't changed. I support the e-levy. The headline of my article says that the e-levy is a good idea, but must be designed properly. So I support the e-levy. I support that the electronic transactions must be taxed. I support the idea that the digital economy must be taxed for government to raise revenue to finance its developmental projects. But you must design it well. If you are, for example, let me give you a typical example. If you are saying that one of the objectives of the e-levy was to bring in the people in the informal sector who do not pay personal income tax. So, for example, the carpenter who comes home to roof my house hasn't been paying personal income tax. You design the e-levy in such a way that the carpenter pays personal income tax. But if you design it such that the one paying the carpenter, is the one paying the levy, that you have not achieved your objective. The receiver must be the one to bear the tax burden and not the sender. That is my first point. Number two, there must be a regulation that if we engage anybody in the informal sector, then the payment must be by electronic or Momo or whichever way, which could be easily taxed by the government. And number three, the government can even abolish the e-levy as it stands now, and then tax the profits of the telcos. Now, when you tax the profit of the telcos...
But that was always an option for them right from the start. Like other countries, even neighboring countries have done. They decided not to go for that.
Sure. So that's what I'm saying, that all these options are there for government to review. If the e-levy as it stands now is not performing, then government must review. In reviewing it, some of us are making submissions to the inputs already. And I have mentioned, I think, 3 already. And I'm saying that the government can tax the profit of the
Hello,
telcos.
Doc. Now I'm losing you. I cannot hear you. I don't know what it is. Maybe you could unmute. I don't know whether you've unintentionally muted yourself. Hello?
No, I'm fine. I'm fine. I can hear you. I'm fine.
Dr. Edusa Akodia, can you hear me?
Yes, I can hear you. I'm fine.
Hello? Okay.
Hello?
It appears...
I can hear you. I can hear you.
I cannot hear him from here. We'll try to rectify that. But interesting stuff coming from Dr. Edusa Akodia of the KNUST, making mention of the fact that the e-levy was improperly designed, the application. There was no proper marriage between them. And now we're seeing the fruit, or maybe lack of it, as far as the yield is concerned. And suggesting, I asked him whether this meant it was dead on arrival, and he confirmed in the affirmative, saying, yes, it was. We'll come back to Doc, because there are some very important points I want to run by him finally. But let's also get an update from Parliament. Kweku Asante is our parliamentary correspondent. He joins us from there. Kweku, a lot has been happening in Parliament. Has the Finance Minister arrived yet? And what are the updates you can give us currently?
So it's 30 minutes past 1. Finance Minister Kenneth Ofori-Atta was scheduled to be in the House at 1 o'clock. That is 30 minutes past the time he was expected to be here. The Finance Minister Kenneth Ofori-Atta is still not in the House by all the indications that we've had. Indeed, when the House resumed from its break to wait for the Finance Minister, the minority leader Haruna Idrisu raised concerns about why the Finance Minister was still not in the House and that members were ready. Indeed, if you could see Parliament, the seats are almost all filled. The Finance Minister is the person they are still waiting for. The majority leader gave the indication that
well, we have a bit of a concern there with the feed. Technology not being our friend this afternoon, unfortunately. First, it was Dr. Yao Edusa Akodie. Please go ahead. Kweku. Hello, Kweku, if you can hear.
So, I mean, Benjamin, with regards to the concerns about whether or not this is a media review, well, the concerns of whether this is a media review or this is a speech or anything, the order paper that has been advertised, that has been placed before MP says this is the media review of the budget statement and economic policy and supplementary estimates of the government of Ghana for the 2022 financial year. And so this is a media budget review. That is what is expected to be discussed, unless, of course, this order paper will be amended some way along the line. What we are expecting the Finance Minister to bring is a media budget review and also to ask for more money. Indeed, as of now, we don't have any indication if the Finance Minister is going against that indication he gave the House last week that he will be asking MPs to approve more money to implement the 2022 budget. Indeed, that is exactly what the Deputy Majority Leader, Alexander Afenyo-Markin, last week when he presented the business statement of the week, he said the government and the Finance Minister had given Parliament the firm indication, and I'm quoting him, firm indication that he will be presenting supplementary estimates for approval to implement the 2022 budget. We know it's only 2 weeks ago that Parliament approved some $750 million loan for government to draw down and use to construct some road projects across the country. There are those in the minority who say the government needed that to do other things and not just for the roads. Of course, it will be interesting to see what will happen as the year goes down. So what the Finance Minister is expected to do is to review the mid-year budget and also present to Parliament some supplementary estimates, ask MPs to approve those amounts for the 2022 budget's implementation. It's not clear yet how much he'll be asking. Of course, we have no indication whether government will be introducing taxes, what exactly to be doing with the E-levy, whether it's reducing the rates, because so far government has not had the amounts it was seeking to raise from the E-levy. So the House is currently on break, awaiting the arrival of Finance Minister Kenneth Ofori-Atta to present the mid-year budget review and also present his supplementary estimates that he's expecting.
Take leave of us. I hear there's been a suspension of sitting for about some 10 minutes. So as we await the presence of the Finance Minister in Parliament, is that correct?
Yes, the House is currently on break. The Speaker of Parliament, Alban Bagbin, announced that because Finance Minister is not here and he also has other business to do, the House cannot sit without doing anything. Indeed, if you look at the order paper, it's a bit lean because of the mid-year budget statement. When the Finance Minister came in, the expectation is that the Finance Minister will come and present a mid-year budget review, then it will rise. So questions were not even programmed for today. There were a few motions and a few bills to be laid. Those ones have been done, and the House is literally just waiting for the Finance Minister to make his presentation so that the business for the day will be done. So once the Finance Minister was not in, there was actually nothing going on until the minority raised concerns about why they were still waiting for the minister, what indication he had given. Indeed, there are even those in the minority side who said that if the minister is not coming, then they should just take an adjournment and go. But the majority leader gave an indication that the Finance Minister is on his way and should be in the House anytime soon to make the presentation.
Thank you so much, Kweku, for bringing us those latest updates. We'll be coming back to you later on as and when there are further developments. Kweku Asante there, my colleague in Parliament, our parliamentary correspondent. But let's now connect all the way from the USA. We have Associate Professor at the Andrews University, Williams Kwesi Pra, joining the conversation. Thank you so much, Prof, for joining the conversation. My bid to you, we were expecting a mid-year budgetary review today, but now it's not so clear. According to the order paper in Parliament, it's a mid-year budget review. But now we are hearing of supplementary budgets and requests for further funding and all of that. We've not heard from the finance minister, so it's still a bit murky. What's your take on this?
Hello, can you hear me?
I can hear you.
Okay, thank you very much. So what is currently happening is that we are all aware that based on the data for the first quarter, we realized that the country's revenue generation was not achieved. In fact, the data shows that the revenue that we collected for the first quarter, which was about 12 billion, our interest payment alone swallowed it up. So it makes quite, and it's also in the right direction for the finance minister to come up with a supplementary budget. And supplementary budget simply is to come for additional ways of raising revenues and also putting expenditure cuts in the budget. And then probably government will be looking at a new direction for its policy statement. Remember that at the beginning of the year, government laid out about 10 main policy direction for 2022. Some of them may have to be looked at. And the minister can only do this.
Which ones from where you said should be looked at?
So already we know the discussion going on the free SHS. The minister must make a statement whether it is going to be reviewed or not.
Do you think it ought to be reviewed?
For me, the government said 2 billion. Currently, they're having revenue challenges. So is government going to come out with a new form of revenue line to support the program? Or government may be asking parents to pay. The indication is that government will want to stand by its leading flagship program, which is the free SHS. If you look at the government program, and if you ask me, one thing I can remember about the Kufuor's government is the free SH program, not the planting for food and jobs.
So can we sacrifice planting for food and jobs at the expense of free SHS?
If you ask me, definitely that's what I would do.
Let's
look at
go ahead.
One program. The food planting for food and jobs should be, in terms of revenue and money going to that fund, should be sacrificed and given to free SHS to make that program work. And indeed, if government is going to also look at a 20% reduction in what the government calls grants or funding going to ministries and agencies. I'm just going to do a simple analysis. All the ministries, departments, and agencies, district assemblies, they have something that they collect, which they call IGF. That IGF is in control by the ministers or the district assemblies by themselves. Let's ask ourselves, where do they channel those resources to? I'm sure if we really want to make our district assembly work well, we can make sure that those resources that they are collecting goes into areas that will support the economy. I am doing some exercise for about 2 of the districts. They collect a lot, and if you ask, most of the monies are used to pay certain allowance and blah, 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 blah. Whilst the communities are suffering, and they will always go and tell the community that we are waiting for funding from government.
So again, a failure to maximize the system because of improper checks and balances, even where we are raking in some good revenue, it falls through the cracks of corruption and all of that.
Yes. So that is where I'm thinking that, so if you look at government plan for 2022, there was digitization agenda. It is high time they move this digitization agenda to monitor the revenues collected at the district assemblies, ministries, departments, and agencies. And then government will now be able to do analysis and say, should we say we are not going to pay the salaries of those workers? Can their internal generating revenue pay those workers? Then we set them out. The government has done it already for DVLA. They are on their own, and they are doing perfectly well. And the government gives them targets, and they give government what government is due, and they pay themselves very well. Can we be thinking something along that line? Instead of depending on government, if you critically look at 2022 budget, monies that is going to go to ministries, assemblies, and districts, 2021, it was 26 billion. 2022, government projected almost 37 billion. It was the third highest expenditure line item. So for me, it is something that we may have to look at it critically and see how we are going to plug the loopholes and make sure that those internal generated funds by those entities are used to support government instead of them relying on government all the time. Yes, there's a formula for distributing funds to the district assemblies. What about their own internal generated funds? Also, in this budget, this presentation, I am having a feeling that consultation has not been done well between government and the minority. My fear is that we may go back and have the same problem we had in November and January
with the E-levy,
when finance ministers failed to do consultation. The signal we are picking, what you are picking now is that timing is a problem. It's giving an indication that there are still consultations which has not been done between minority and then the majority. Let's remember that this Parliament House, there's only one person who makes the difference. So government, you are government, but you don't have you are not too bold to make decisions. You always have to consult, collaborate, and work with the opposition. If we don't take care, this new budget that is going to be laid, I'm calling it new because a lot of changes will come in terms of revenue generation and some taxes.
Right.
Government will see a challenge coming from the minority, and it is also going to delay the whole process. At this time, what is happening is that government may have to convince Ghanaians the need for us to pay taxes, and then convince us that when we pay the taxes, they are going to use the taxes for jobs and betterment of Ghanaians and the country to move forward. Eliminating of waste. I'm expecting that the ministers will come and talk about how he's going to cut down waste. When I say waste, that's corruption. It's reported 12 billion cedis for the past 6 years. What is his plan to eliminate or reduce that waste in the system to make sure that money flows into government for proper allocation of resources to businesses to be able to work? So these are my thoughts for now. Thank you.
Prof, thank you so much, Professor Pepra, all the way from Andrews University in the United States, joining the conversation. When we're done, we'll go back to all of these people to find out what their takes are on the different dynamics. Let me now bring in Yao Latte, partner at Deloitte Ghana. Mr. Latte, a very good afternoon to you. Thank you for joining the conversation. First off, you're looking at our debt as it has accumulated over time, 393 billion currently, the equivalent of $54.4 billion. That is one, factor to deal with. We have our debt to GDP ratio, which is still a big problem, especially considering the IMF program we want. And now, instead of a mid-year budgetary review, we're being told so many things. There could be a supplementary budget. There could be a statement presented on the floor of Parliament. What are your initial thoughts on this before we get into the E-levy? Because just this morning, I was speaking to Joseph Obeng, Dr. Obeng of GUTA, who was saying, look, when it comes to the E-levy, for example, we want a reduction from 1.5% to 0.5%. What do these dynamics mean to you?
Yeah, thank you very much. So I think the two are related, but in different ways to say. So our debt level is rising and has been rising over the last few months for a number of reasons. The main one being the fact that the local currency has been depreciating against particularly the US dollars. And the key driver for that is our depletion of our reserves. So as we speak, the local currency has depreciated close to 20% or even a little more than that in the last few months. And so if you have dollars or dollar notes that you've contracted over the years, a lot of the euro bonds that you contracted were denominated in dollars. At any point in time that you convert this dollar-denominated facility to Ghana cedi, your debt rises. And so that's one key factor. So if we are going to deal with our debt level, we would have to address our problem with exchange rate. And the challenge that we've had with the exchange rate is largely due to the fact that we are not getting foreign inflows. We are not getting foreign inflows because as a result of the downgrade, we are not able to raise bonds from the international market. If we even go to the international market to raise money today, the cost of that debt will be too expensive for us. And even the investor that will come will not give us the oversubscription that we've witnessed over the last few years that we've gone to the market. So one of the ways that we have to use to manage our rising debt is to manage local currency. Secondly, our interest payments on our loan facilities have also been increasing. And I'll need to comment by panelists that the first quarter of the year, you see that all expenditure for the first quarter were below target. The only expenditure item that went over and above target was our interest payments. So we targeted to pay about 10 billion Ghana cedis on interest commitment alone. We ended up paying 10.6 billion on interest payments alone. And this 10.6 billion represents 63% of the first quarter revenue. So you are spending 63% of your first quarter revenue paying interest, not to talk about the principal, but interest alone. Compensation is another 45%. So if you add these two items together, you get 108% of your first quarter revenue going to interest and compensation. That is really a worrying trend. And so it's not about supplementary budget or budget review. We have a situation where our run rate is going at a worrying rate. So you are expecting to get revenue of, let's say, 25 billion in the first quarter. You end up getting 16 billion. So you are short by a significant margin.
Right. Mr. Latte, just pardon my interjection. Let me just let our viewers know that the finance minister finally has entered Parliament, 48 minutes past the hour of 1.